If you're new to investing and confused by all the options out there, stocks, bonds, funds, don't worry. Today, we're breaking down something super beginner-friendly, mutual funds. Let's make this easy. So, what exactly is a mutual fund? In simple terms, a mutual fund is like a basket of investments that many people contribute to. Think of it like this. You and thousands of others put your money together, and a professional fund manager uses that money to buy things like stocks, bonds, or other assets. When you invest in a mutual fund, you're buying a small slice of that whole basket. You don't have to pick individual stocks, the fund does it for you. Why do investors love mutual funds? Here are a few reasons. First, diversification. Your money is spread across many investments, so if one company doesn't do well, it won't ruin your entire portfolio. Second, you get a professional fund manager who makes decisions for you. And third, it's just easy. Great for people who don't have the time or experience to pick individual stocks. Here's how it works. 1. You invest money into the fund. 2. The fund pools your money with other investors. 3. A manager uses that pool to buy a mix of investments. 4. The value of your mutual fund share goes up or down based on how those investments perform. You can usually buy mutual funds through a brokerage, your bank, or even your retirement account. There are lots of different mutual funds. Here are some common types. Stock funds. Invest in company shares. Bond funds. Invest in government or corporate bonds. Index funds. Track a market index like the S&P 500. Target date funds. Automatically adjust risk over time based on your retirement date. Each one has a different goal and risk level, so you can choose what fits your needs. Let's weigh the pros and cons. Pros. Diversification. Managed by experts. Great for beginners. Easy to invest in. Cons. Some funds have fees. Less control over specific investments. Actively managed funds don't always beat the market. The key is to know what you're buying and keep your costs low. So how do you start investing in mutual funds? It's actually pretty simple. 1. Choose a brokerage, like Vanguard, Fidelity, or Schwab. 2. Open an account. Can take just 10 minutes. 3. Pick a mutual fund that fits your goals, like a total market fund or S&P 500 index fund. 4. Invest and stay consistent. That's a wrap on mutual funds. Hopefully, now they don't sound so scary. Start simple, stay smart, and keep building your financial future. See you next time.